So next we'll see about chapter 10, reinsurance. It's a very interesting chapter and you should know what is reinsurance. So reinsurance is a very big industry. So insurance itself is a very big industry. So reinsurance is again a very big industry. So think about like a reinsurer is 10 times a bigger insurance industry than insurance. For example, HDFC is an insurance company. Their net worth is 10,000 crores. The reinsurer who reinsures HDFC will be 100,000 crores. Okay, so that is very big industry. So you should know what is reinsurer. Here they are discussing just very minute information about reinsurance. Reinsurance is itself is a separate exam book and it is a 40 marks exam. It is a very big chapter and it's a very big book and it contains a lot of detailed information about reinsurance. Maybe if you are interested, you can take that in the future. So we'll touch base on insurance very little. Okay, here in this one. So reinsurance na enna? Insurance company insurance பண்றது reinsurance. Simple. Insuring the insurance company. Why why we need to insure an insurance company? Because the financial losses can happen for the insurance company also. The insurance company can go for losses because of lot of claims, because of fraud, because of higher claims, big claims, because of flood in one area. So all these things can happen. So the insurance company can go for financial loss. To secure their business, insurance company will insure their own business, that is called reinsurance. Any questions? Okay, great. So reinsurance is equal to insurance for insurance. Okay, just as individual. So how individual needs an insurance, like that insurance company also needs an insurance. So they are doing insurance. So risk transfer from insurer to reinsurer. So here, only insurance and reinsurer, they are involved, not the customer. Customer here is, if I am putting an insurance and my insurance is going for HDFC and HDFC doing that insurance to some other company, I can claim only to HDFC, not to the reinsurer directly. So there is only one exception we have is called cut-through clause. That cut-through clause, the reinsurance, we can directly claim with the reinsurance. That happens only when, the immediate insurer is on solvency. Okay. So reason why the reinsurer needs the reinsurance. Any questions so far? This is a very important chapter. புரியலன்னா அங்கங்க நிறுத்தி கேட்டுங்க. Okay. So why they need reinsurance? Protection. Simple. எல்லாருக்கும் ஏன் இன்சூரன்ஸ் தேவை? Protection. Like that, they also need a protection. So any large loss can come, single large loss or accumulated loss of a single event, anything can happen. So they need to protect themselves. Stability. So stability means if they are facing lot of big losses, they need to close the insurance company. They cannot maintain it. So to avoid big losses, to maintain stability, they need insurance. Capital. Capital is முதலீடு. The amounts that you are investing. With the capital only, your capacity is decided. If you have capital of 100 crores, that means up to 100 crores you can write insurance. So you cannot just increase your capital just like that. If you have somebody backing up, for example, I am having 100 crores. Okay, I have a support from reinsurer. The reinsurer capacity is 1000 crores. That means I can do a insurance policy up to 1000 crores. நான் கேபிட்டலை இன்க்ரீஸ் பண்ணல, பட் ஐ எம் கெட்டிங் ஜஸ்ட் த சப்போர்ட் ஃப்ரம் த ரீஇன்சூரர். ரீஇன்சூரர் சப்போர்ட் வாங்கின உடனே என்னோட கெப்பாசிட்டி ஆஃப் ரைட்டிங் 1000 crores policy is increased. Okay, without increasing the capital. So rating, adequately reinsured. For example, rating is star rating. For example, this is 5-star hotel, this is a 4-star hotel, like that rating, like that insurance company is also having rating. If you have a reinsurance support, you have a star category. Okay, if you don't have an insurance support, you will have a less star category. That's all. Expertise means the reinsurance company are all very old companies. They have lot of experience in the insurance market. So if you are starting a new insurance, you can get all the knowledge from the reinsurers to you. Diversification. For example, you are doing business only in India. For example, HDFC is doing insurance only in India. They want to do a business in Singapore. They want to start an insurance company in Singapore. They don't know how to start a company. They don't know the market. So they are approaching some other reinsurer company there, putting partnership. They are starting a business there. That reinsurance company know about the business in Singapore. So they are supporting. So when you want to expand or diversify your new lines of business or geography, you need reinsurance. So these are all the reasons for reinsurance. So types of reinsurance. We have two types, major types, facultative and treaty. Facultative is, okay, the insurance company and reinsurance company. Idhara vandu customers kadayadu. So insurance company, they are receiving 100 crores policy. Face amount is 100 crores. They are submitting an application to the reinsurance company. இந்த மாதிரி எனக்கு 100 crores policy வந்திருக்கு, இது approve பண்ண முடியுமான்னு பாருங்க. They are submitting a policy, whether you can approve or not. The reinsurance company sees that application, reviews that application, and they are deciding whether to approve this reinsurance or not. So this is called facultative. Individually, one by one, all the applications are reviewed and approved or rejected by the reinsurer. This is called facultative. Okay. Treaty means insurance company, reinsurance company will have a bond, will have a contract, will have a treaty, whatever you call it as. They will sign a contract with some terms and condition. See, up to 50 crores. If the insurance policy satisfy the below conditions, you approve on your own. No need to come and ask me every time when you receive a application. So insurance companies, HDFC, they are reinsuring themselves to Swiss Re. Swiss Re is the reinsurance company. Now HDFC and Swiss Re, they are writing a bond treaty up to 50 crores if the application fulfills the terms and conditions. Terms and condition A, B, and C. If it is fulfills, HDFC itself will approve. You itself, you approve the policy. Don't come and ask me. Like that, they are giving the power. The Swiss Re is giving the power to HDFC itself for 1 year. So this is called treaty. So why they are doing so? For example, every year, 500 applications are coming. This 500 application, the Swiss Re has to review all this application and they need to approve it. So waste of time, waste of money, waste of manpower, everything is there. So instead, they are putting a rule. Okay. If this satisfies this rule, you yourself, you approve on your own on behalf of me. நீயே சைன் பண்ணி நீயே அப்ரூவ் பண்ணிக்க, என்கிட்ட கேட்காத அப்படின்னு சொல்லிடுறான். With good, trust. So this is called treaty. So treaty insurance, if they have a contract, so HDFC versus Swiss Re, Swiss Re company cannot reject any claim. They need to automatically approve all claim. They cannot reject any claim because they are under the treaty. நீங்க சைன் பண்ணிட்டீங்கன்னா கொடுத்துதான் ஆகணும் claim. They cannot reject anything. Okay. So facultative. Facultative is, what are the disadvantage? It is time consuming and costly because you need to review and underwrite each and every policy. Treaty, it reduces the time, it reduces the cost, but what is the disadvantage? The business, you know, if the insurance company is doing bad decision, bad underwriting, they are not trustworthy, then the reinsurance company will lose all their business. So this is the only risk here. Okay, so we'll see what are the other types of reinsurance: proportional and non-proportional. Okay, so insurance reinsurance basic புரிஞ்சாதான் proportional reinsurance புரியும், இல்லைன்னா சுத்தமா புரியாது. If you have any doubt what is reinsurance, what is insurance company, what is reinsurance company அப்படின்னு புரிஞ்சதுன்னா we can go forward, otherwise you won't understand. Any questions?
Oh, sir.
So basically reinsurance is, for example, face amount is policy amount, 100 crores somebody is asking. Okay, premium is 1 crore premium for 100 crores. Now insurance company has the capacity to approve for 10 crores. Reinsurance வந்து மீதி 90 crores capacity எடுத்துக்கோ. So the insurance company will approve 100 crores policy in behalf of reinsurers by taking reinsurance as the backup. So if claim is coming 100 crores claim, they will claim only primary insurer. Now the reinsurer will pay the claim to insurers, primary insurers will pay to the claimant, not directly to reinsurer. So 10 crores capacity, 90 crores capacity, together they are approving 100 crores. Same time the premium also they will split it. 1 crore premium, if the person is paying 1 crore premium, 10%, 10 crores எடுத்துக்கறாங்க இல்லையா claimsல, அதனால 10%, 10 lakh will go for primary insurer, 90 lakhs will go for the reinsurance. Clear? This one is clear, right? Okay. So proportional reinsurance, we have quota share and we have surplus. Okay, so we'll see what is quota share. Quota share is fixed percentage of every risk is ceded to reinsurer. Ceded means given. அதாவது எவ்வளவு நான் வச்சுப்பேன், எவ்வளவு நான் உனக்கு கொடுப்பேன் அப்படின்னு தான் ceding. That is called ceded. That term they will use in reinsurance only. 10 லட்சம் ரூபாய் நான் வச்சுக்கிறேன் அப்படின்னா ceded. 90 lakhs உனக்கு கொடுத்துறேன்னா that is what I am giving it to you. So I am ceding 10 lakhs, 90 lakhs I am giving it to you. That ceding is called, that partition is called ceded. So fixed percentage for all the claims, they will fix a percentage. And the percentage vachidhan they will go for reinsurance. For example, insurance issue fire policy, 50 lakhs fire policy they are issuing. Okay, It's for 50 lakhs. Now, the reinsurance quota share treaty, the treaty, they are writing a bond. The treaty says any claim, 70% is yours, 30% is mine. They are splitting percentage. So HDFC, Swiss Re. Swiss Re is saying any claim, 70% is HDFC, you bear it. 30% I will pay it. So this is called quota share. Same wise, the premium also is shared. If premium they are paying 1 lakh, 70% you keep it. HDFC will keep it. 30% you need to give it to me, Swiss Re. You need to give it to me. This is called quota share. Claims also 70, 30. If 10 lakh claim is coming, 7 lakh you pay, 3 lakh I will pay. So this is called quota share. Quota share they divide into percentage. Whatever percentage they are dividing, the same percentage, the premium will be divided, the claims will be divided, both the things will be divided in the same percentage. Any questions? No questions. Okay. So next proportional reinsurance is surplus. Surplus, it is little different from quota share. They are saying surplus. Surplus na enna adhigama. The direct meaning is adhigama porth. Surplus. I'm having under 10 lakh rupees surplus. அளவுக்கு அதிகமா என்கிட்ட கொஞ்சம் காசு இருக்கு. That is called surplus. So in surplus, they will keep a limit. They will keep a limit. 50 lakhs, 10 lakhs, 1 crore, they will set a limit. Anything going beyond that, that will be paid by the reinsurer. If it is within that, it is for the insurance itself. Okay. Example, here they are setting a limit 10 lakh. Okay. The HDFC is HDFC and Swiss Re, they are setting a limit 10 lakh. Anything below 10 lakh claim is coming, HDFC will pay. Anything above 10 lakh is coming, okay, 12 lakh or 15,000, 12 lakh or 15 lakhs, 10 lakh you pay, the remaining amount I will pay. So this is the decision. So policy sum assured is 40 lakhs. So the insurance company, the HDFC will keep 10 lakhs. The remaining 30 lakhs will be borne by the reinsurance company Swiss Re. So risk sharing also same. So insurance HDFC is 10 lakhs, reinsurance company Swiss Re is 30 lakhs. If you divide that into percentage, insurance company 25 percentage, reinsurance company 75 percentage. So premium, if they are paying 80 lakhs, same premium, it will be divided in 25 and 75 as per they are dividing the face amount. Okay. So 25 percentage of 80 is 20,000. 75 percentage of 80 is 60,000. The claim also being shared in the same percentage. 8 lakh claim is coming. 25 percentage of 8 lakh is 2 lakh paid by HDFC. Remaining 6 lakh is paid by the Swiss Re company. So this is how the sharing is done. So they will set a limit, and whatever going beyond that limit, that they will divide it, they will convert that into percentage. In that in the same percentage, okay, they will share the premium, they will share the claims. So this percentage, 20, 80, 30, 40, 50, 50, it is not fixed by the treaty. It depends upon the retention limit of what is being decided. In the retention limit, இப்போ வந்து 20 lakhs மாத்திட்டாங்கன்னு வச்சுங்க. For example, if it is changed to 20 lakhs, then 40 lakhs insurance policy, 20 lakhs HDFC கிட்ட போயிடும். மீதி இருக்க remaining 20 lakhs will go for Swiss Re. That means 50-50. So the percentage now changing. Initially the percentage is 25-75. Now it is changing to 50-50 by changing the retention limit. So any claim for 8 lakh claim now, 4 lakh you pay, 4 lakh I will pay. Premium 80,000 pay பண்றாங்கன்னா 40,000 you take, 40,000 I will take. So everything changes. So the major difference between quota share and surplus is quota share, the percentage is fixed 70-30. அதை வந்து கான்ட்ராக்ட்ல போட்டுட்டாங்கன்னா it is not going to change. Anything you need to take 70, I will pay 30. That's all. But in surplus, as per the retention limit, the percentage will always change, keep on changing. Okay, we'll see another example. If the policy amount is 12 lakh, so retention amount is 10 lakh. Reinsurance takes 2 lakhs. Now, the proportion is insurance company 83.3% is taken by insurance company. Only 16.7% is taken by the reinsurance company. Now the retention is changing. Now the percentage is changing. This is how the percentage will always change for surplus. So with this, we are done with surplus treaty. Any questions so far? So the retention limit is called line. Okay. So they will usually say 10 lines, 20 lines, 30 lines, etc. For example, so retention limit, we have seen 10 lakhs. Okay. So in treaty, they will say reinsurance is for 10 lines. They'll mention it as 10 lines. That is the language of reinsurance. 10 lines means 10 lakh into 10. That is 1 crore. So up to 1 crore is the limit of the reinsurance. So they will talk in lines. So if reinsurance is mentioned as 20 lines means 10 into 20, 2 crores. Okay. So அவங்க டைரக்டா சொல்லலாம் 2 crores and but they have the style of saying. So anything below the retention limit is fully retained by the insurer. Okay, below 10 lakh, everything will be taken up by the insurance company only. Above retention limit is called surplus, that is taken by the reinsurance. Above 10 lakh, if it is 2 lakh or if it is 3 lakh, if it is 30 lakh, whatever it is borne by the reinsurance company. So treaty capacity, how much I can buy? What is the highest capacity? The highest capacity is retention into number of lines. Up to 2 crore, the reinsurance can give the policy. So this is called retention into number of lines. For example, 10 lines surplus, okay, of 50 crore retention. They will ask question like this. What is the maximum capacity of the treaty? 10 lines surplus of 50 crore retention. That is 50 into 10. 500 crores they can insure. Once the risk is ceded, all losses, okay, all losses, even the small losses on the proportion, shared in proportion and the retention. For example, we have seen here, once risk is ceded, that is a policy வந்து approve பண்ணியாச்சுன்னா, whatever it is 30 lakhs or it is 2 lakhs, whatever it is 30 lakhs and all, 2 lakhs and all, it has to be borne by the reinsurance according to the share percentage. So quota share and versus surplus. So quota share, every risk is ceded. Surplus, no. Anything below 10 lakhs, example, retention limit. Anything below retention limit is not covered. Only more than the retention limit is covered. Proportion. Quota share is fixed proportion. Surplus is varies. So best for small new business. Quota share is for best new small business. Surplus is for very big portfolios. Small risk treatment. Quota share seats 20% even in tiny 10 lakh risk. Surplus retains entire tiny risk. So now we'll go for non-proportional reinsurance. So now we have seen proportional reinsurance, two types, quota share, surplus. அதுக்கு முன்னாடி general reinsurance treaties பார்த்தோம். One is facultative reinsurance, treaty reinsurance. After that, we have seen proportional reinsurance. In that, we have seen two types. One is quota share, surplus. Now we have non-proportional reinsurance. In that, we have three types: risk XL, catastrophe XL, and stop loss. இது என்ன size மாதிரி இருக்குன்னு பார்க்காதீங்க. XL is excess of loss. They call it as XL, excess loss. ஒரு அளவுக்கு அதிகமா ஒரு லாஸ் போகுதுன்னா அதுக்கு பேர் வந்து XL, excess of loss. Okay. I'll go first with the examples, then only you will understand it clearly. So risk XL, catastrophic XL, then stop loss. So risk XL வந்து it protects against large individual risk losses. Okay, large individual risk losses, that is very important. Retention of reinsurance 10 lakhs. So reinsurance coverage வந்து they are giving from 10 lakhs up to 40 lakhs. Now there is one loss from factory, only one loss from factory, that is for 30 lakhs. So now the insurance company has 10 lakhs, they will get 20 lakhs from the reinsurance company and they will pay the 30 lakhs claim. So this is large individual risk loss. Okay. So this is called risk XL of loss. ஒரு loss அது பெரிய loss வருது. Catastrophe excess of loss. Catastrophe means we know it is an event, big natural calamities. For example, cyclone, earthquake, flood, tsunami. ஒரு event, multiple claims will be triggered. One event, multiple claims will be triggered. But it will happen because of only one event. For example, 2015, Chennai was hit with flood. Thousands of cars were submerged underwater, drowned. Now the thousands of cars, they went for claiming, insurance claim. So one flood causes 1,000 claims. Okay, but everything happened because of one catastrophic event, flood. So this catastrophe XL of loss cover will cover multiple losses because of one catastrophic event, many losses from one catastrophic event. So this is called catastrophic excess of loss. For example, total insurance loss is 100 crores. Retention is 20 crores. So insurance bears 20 crores, remaining 80 crores will be borne by the reinsurer. But only challenge, it should happen from one single event. Okay, like tsunami, flood, earthquake, or cyclone. Second, the last one is stop loss reinsurance. Stop loss reinsurance is stop loss reinsurance. Insurance annual premium. For example, you know, if the claim, total amount of claim is more than the premium collected, it is not about the loss. So it is about the premium collected. For example, insurance company is collecting 1 year premium of 150 crores. Now the claim, one big claim is coming. That big claim amount is 200 crores. So now insurance company cannot pay 200 crores because they have collected the premium only for 150 crores. 150 கோடி தான் பிரீமியமே வந்திருக்கு, வருமானமே வந்திருக்கு. ஆனா கிளைம் பார்த்தீங்கன்னா 200 crores, one big claim or multiple claim. Now this they cannot pay, but they can protect this by having a stop loss cover. So stop loss reinsurance வச்சிருந்தாங்கன்னா, now the 200 rupees claim is coming, 200 crore rupees claim is coming. The stop loss limit, they will specify it as 75%. Stop loss reinsurance la 75%, they have mentioned anything about 75% I will pay. அப்படின்னு reinsurance company they are promising. Now the claim is 200 crores. 200 crores la 170, okay, 75% is the stop loss amount. Anything going beyond the stop loss 75% insurance company will pay. Okay, so now your insurance company bears a claim up to 75% of 200. So your annual premium is 200 crores. Annual நீங்க 200 crores collect பண்றீங்க. Now 75% of 200 crores is 150 crores. That means stop loss covers 75% அப்படின்னு வச்சிருந்தா, anything beyond 150 crores the reinsurance company will pay. For example, you are getting a claim for 190 crores. Now you have 75% stop loss. So 200 crores உங்களுடைய வருமானம். In that 75% is 150 crores. Now the claim is 190 crores. That means 150 crores you pay, remaining 40 crores the reinsurance company will pay. So this is called stop loss. Okay. So three non-proportional treaties. One is risk excess of loss, risk XL. One large claim, only one claim, large claim, that will be covered by risk excess of loss. Okay, catastrophic excess of loss. One catastrophic event, but multiple claim, that will be covered by catastrophic excess of loss. Stop loss, any loss going beyond your premium collection, that will be covered by stop loss. Okay. So covers single risk loss exceeding the deductibles. Insurance pay every loss of 2 deductibles. Reinsurance pays the amount of loss exceeding the deductibles up to the cover limit. So example, deductible is 100 crores, cover limit is 50 crores, loss is 170 crores. Insurer 100 plus 20, 120 crores, reinsurer 50 crores. Same example. You can read this or you can read my example, whatever it is. Catastrophic excess of loss. In this one important warranty is there. In catastrophic excess of loss, I told catastrophe means one event which is causing natural event which is causing multiple losses. Two risk warranty, there is a clause, there is a guarantee or a warranty. நம்ம முன்னாடி பார்த்தோம் இல்லையா, வாட்ச்மேன் வாரண்டி, ஆர்ம்டு கார்டு வாரண்டி, அந்த மாதிரி இந்த catastrophe lossக்கும் ஒரு வாரண்டி இருக்கு. அது இருந்தால் தான் அது கவர் ஆகும். That warranty is called two risk warranty. That means, for example, a cyclone, one cyclone is there and cyclone causing damage to two houses. House A insured by the insurer, house B insured by the insurer. Okay. Now both are event by the same cyclone, one single cyclone, Varda Puyal. It caused damage to both the houses. Now the same event, at least two claims are coming. House A, house B, two damages, two claims are coming. Then the two risk warranty is satisfied. Catastrophic XL reinsurance can respond. That is called two risk warranty. For example, if one house A is damaged, house B is not damaged, only one claim is coming because of same cyclone event, one cyclone event, then they cannot cover under catastrophic excel of loss cover, because multiple losses should come because of one event, not only one event, one loss. So that is called two risk warranty. So it covers named peril, flood, cyclone, earthquake, terrorism, accidental damage, everything. Stop loss protects high ratio losses, multiple catastrophic events in the same year. Okay. Cumulative losses across portfolio. Portfolio is the amount that is being collected is exceeding the current year's premium amount. So this is least popular because insurance company வந்து எவ்வளோ ப்ரீமியம் வருது, அதுல இருந்து எவ்வளோ கிளைம் வருதுன்றது தான் இதை வந்து we are comparing the amount premium collected versus claim amount. இன்சூரன்ஸ் கம்பெனி சரியா நடத்தல, சரியா their operation is not good, they are not doing good underwriting, they are not doing good claims, that means it will, this loss will affect the reinsurance company also. So usually reinsurance should cover only unexpected losses. நீ சரியா கம்பெனியை நடத்த தெரியாம லாஸ் வந்ததுன்னா அதுக்கு கவர் பண்ணணும்னா then it will lead to disadvantage. So this is least popular. So reinsurance reluctant as it may subsidize direct insurance inefficiencies. inefficient ஒரு கம்பெனியை நடத்தினா இது வந்து ட்ரிகர் பண்ணும், அதனால they are not, this insurance policy is not very popular. Okay. So comparison risk excel, one large individual loss, big factory fire. Catastrophic loss, one catastrophe causing many losses, cyclone, flood. Stop loss, excess total year losses, high annual ratio. So we are done with reinsurance policies. Reinsurance